Hello, guys, and welcome to 21metrics podcast. Let's talk crypto, macro, and everything for 10 minutes as usual. So a lot of things going on. The war in Iran, a lot of like geopolitical risks. But Bitcoin has been resilient along Ethereum and Hyperliquid, for example, have been managing well despite all the risks involved. But yeah, let's move forward. So check our partner Sarsi.ai, the smoothest way, the fastest way to shift your crypto. I highly recommend that. And Shutterskin bot, I recommend that too. But let's check like on chain. So Bitcoin is at 71k currently. Actually, I think right now the situation in Iran is de-escalating for now, and it seems that Donald John Trump wants to de-escalate the situation, which makes sense, and we are seeing risk assets like Bitcoin recovering heavily. So Bitcoin recovered from 68k to 71, 72k, and we are seeing some like retail buying here. So the green indicator is retail CVD, but we are not seeing a whale level buying yet. So at least the retail is interested. Retail is acclimating here. So this is like retail entry point. So looks promising. Let's move forward. So this an article I made for CryptoQuant a while ago. So I think the lower Bitcoin goes, we are moving into like deep value zone, which is like this MVRV value zone of below 1. And I think we'll probably reach that in order to Bitcoin to drop into MVRV, like it should drop like maybe minus 20% from here. So until Q4, I think we might have sideways market for Bitcoin. At the same time, we could have like we could see like Hyperliquid and probably like gold, BaxG, XAD performing well until the last quarter, but like I would see Bitcoin maybe going sideways or touching the MVRV value zone here. And so Bitcoin is now down like minus 45% from the November all-time high of 126k. So Bitcoin has declined by a lot since then, but we'll see. I see potentially like mostly sideways somewhere ahead here. And then the realized price here. So also like Bitcoin hasn't touched its realized price area territory yet. Like we have these red indicators here. Like the first one is in 2020 and second one is in 22. And like historically Bitcoin has been touching its realized price, which is the average prices of all Bitcoin purchases. But Bitcoin hasn't done that yet. So in my opinion, we are not seeing any kind of capitulation yet. And I think until Bitcoin can kind of like pivot, we need to have capitulation first, and we are not seeing it here yet. That's my argument. Let's check some quant things. So this is from Juhani Savonen, and this is Bitcoin and crypto news sentiment. So basically, what quant Juhani says is that he's saying that the market is bottomed. Basically, I kind of like agree, but on the other hand, I would say that we still can go lower. I would say, as I mentioned, like minus 20%. Is reasonable because we are not seeing capitulation yet. But guys like Juhani, they're buying. He's in accumulation mode. He's saying that his quant model is indicating a market bottom here, and he's kind of like having DCA, I think. So he's looking to buy from here. So DCA strategy is a good one. I'm not like against that, but then again, I would personally maybe wait a while before we can certainly say that Bitcoin has reached the market bottom, and there is like a lot of potential risk factors ahead. So yeah, but yeah, this looks promising, and he's optimistic about the market bottom here. So that's interesting. And Juhani also mentioned that crypto-related stocks and treasury companies look attractive. So he's buying these treasury companies like MSTR and I think maybe H100. So they have dropped a lot. Some of them have dropped like minus 90%. Some even like minus 95%. So the question then remains that how much lower can they go, and that's a good argument. I kind of agree with him, but considering spot Bitcoin, I think it could drop like minus 10, minus 20% from here. But yeah, my actually main point is that are like the RWAs eating altcoins, so like real world assets, and we are seeing this trend here that says that this from Luke Martin tweeted this, and it's a very good point. And I like this. His argument is that looking at the hyperliquid volume, like over 30% of hyperliquid's volume is now like RWAs, and including oil, gold, silver stocks. I think you can trade all of them using hyperliquid. And he's kind of like arguing that we have certain amount of demand and limited liquidity, which is always true. And when looking at hyperliquid, like these RWAs are basically like capturing the liquidity, and this like there's just like the demand might not be enough for like all the what is it like 40 million altcoins, and I think he has a point here. So so the main argument is that RWAs are kind of like cannibalizing the altcoin market. Maybe not like the Bitcoin market, or let's say if you think about tokens, I think RWAs are not a threat to Bitcoin, Ethereum, or like the hyperliquid hype token per se, but to like smaller cap altcoins it could be true. And then like many of these small cap altcoins have been performing poorly recently, and they're like pretty correlated. So I think traders are maybe a bit fed up with that correlation and that performance. And now with the situation in Iran, I think oil is a retail favorite asset currently, and then of course gold, which has actually declined by a lot within a week. But then gold and silver also are interesting to retail investors. So yeah, this question: are we looking at the future here that the altcoin market is pretty saturated? Looking at Dune data, we are seeing like 40 million different kind of altcoins, and is the market like saturated? I think it is saturated, and it's kind of like the attention now moving towards these RWAs, which are like oil and gold and certain stocks. So these, I would believe that this is kind of like a plausible thesis here. So a good one from Luke Martin, and this is something to watch into. And when you think about how are you making your allocations, you need to consider this. So altcoin market is saturated, and yeah, just be careful. I think we can wrap this up. That's all for now. See you next time.